Well, happy Monday, June 5th. Want to share with you the latest data here in the Austin metro area. Want to start with some national news. This is an article out of Redfin. They have a great research department. And so they shared a number of statistics at the end of May on a national level, looking at all the data. Wanted to make a couple call outs. This one first, data based on the homes that are listed and sold during this quarter. Home sale prices declined in 29 metro areas, with the biggest drops. The top of the list was Austin, Texas, 18.3% year over year. Joining us, Oakland, Las Vegas, San Francisco, and Sacramento. So anyways, we were nationally the top market to see price declines, and I'll show you a chart in a minute that will kind of visualize that for you. But anyways, there were some other markets: Cincinnati, Milwaukee, Fort Lauderdale, Newark, Columbus, Ohio. They've actually been going up, even with the higher interest rate. So this is not a national story. It is definitely a market by market story. Here's a few of the charts that they have. The median sales price year over year on a national level has come down a little bit, but you can see this is our spring months. The prices are going up nationally, at least from the low that we had in January or February, depending on what market you are in. Most likely it's going to start peaking out about now, which means the contracts that have already been written are going to close in June. They're going to kind of set the mark. I expect contracts that are being written right now that'll close in July or August might be at or below maybe the peak of this year. So we'll be watching that as the months come ahead. But that's kind of a national look. The median asking price, which means list price, is kind of on trend with last year nationally. So the prices, again, that are being asked are not that different than they were last year. Here is the chart that I thought was very eye-opening. So this is home buyer housing payments. This is how people buy homes. It's how they buy cars, any merchandise that you have to borrow money from. What is my monthly payment? Okay, well, if I come back to 2020, the median home maybe had a mortgage payment below $1,500 a month. 2021, not that different. Why? Because we had super low interest rates. So even though the home prices were skyrocketing, because of the low interest rates, it actually kept the home payment down. And then what happened at the beginning of last year is, bam, interest rates went up, and all of a sudden the mortgage payment just skyrocketed. Look at this year nationally. It's even higher. So again, the same house that you would have bought at the 2020 price with the 2020 interest rate, now you got to buy it at the 2023 price with the 2023 interest rate. What's happened is the home prices are up over $1,200 a month, for the average buyer on the average home. That, what do you do? I mean, that's what it is. That's where interest rates come in, and that's what's putting a lot of downward pressure on the housing market, especially in more expensive markets. And so that's what's happening here in Austin. This chart really visualizes it. I also work with a lot of investors. If you are an investor and you're wondering why nothing will cash flow, in 3 years, your cost just to borrow the money has gone up about $1,200 on the typical house. Rents have not gone up $1,200 a month in 3 years. Maybe they've gone up $300 or $400. They've also had some inflation, but they're not going up at that speed. And what's happening is it's just crushing opportunities to cash flow any properties. All right, let's switch over to Austin. So this chart I ran just a few minutes ago. This is just a historical look at the original price versus the sold price. Original price means what did you start listing that house for and what did homes eventually close for. This is not a per house chart. This is just market average over market average. And so basically you can see the list prices starting last July were coming down, 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 down. They started kind of going back up a little bit this spring. You can see the blue, which is the closed sale price, was truly going down, 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 down. We kind of bottomed out in February at a median home price of $429 in the metro. Since then, we've had a nice little spring recovery. Last month, which was our last full month, we were back up to $465 on median price. June is a little early. We've only had 1 or 2 days of closed sales, so these might be off. But at least for now, you can see right now we're seeing the spring trend as the price goes up, tends to peak in the summer. Why? Well, here's the chart. So this is a more historical look at our sales price trend. So let's go all the way back to 2013. For people that don't understand kind of the cycle of a year, basically it's a camel hump that ends higher than it started. And so every year you start kind of in January at your low point, prices go up in the spring, and then they come down in the fall and winter. You start over again. So you can see it's like these little speed bumps that go up in price every year. Kind of that's what natural appreciation looks like. Go up in the spring, peak in the summer, go down in the fall, up, 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 but it bounces up like little stairs. These were normal years. Austin was doing well, probably appreciating 5, 6, 8% a year. And as we got closer to 2020, some of those years, I think we were going up 8 and 10%. So these were very healthy years in here. But look what happened when we got to the pandemic. It just completely decoupled. And all of a sudden, bam, you've just had this massive spike. We were sitting at January 2020 at a 300,000 median home price. By the time we got to the summer of 2022, 2.5 years later, we were up at 550. That is almost double the median home value in just 2.5 years. And so what happened last year when the interest rate spiked is bam, we had this huge crash. And that's what the Redfin article was talking about. So we bottomed out in February around 442. Sorry, it was before that, 429. But you can see we're having there's that little blip right there, that little spring climb again. But I would expect we're turning back into these speed bumps again. So more than likely, I expect the second half of this year, we're going to see those median home prices soften again. We might be flat year over year. And I've kind of been predicting that since January. We'll have to see what happens in the economy, what happens with interest rates. But so far, we're about halfway through the year. And I'm seeing that kind of traditional spring bounce. I expect we'll see a traditional softening the second half of the year. So that's definitely something to keep an eye on. Finally, let's talk about interest rates. So last week, at this time, interest rates were sitting above 7%. And so this was, let's see, on May 26th, we had peaked out at 7.14%. Then they finally solved the debt ceiling crisis, and that softened up the bond market a little bit, brought it back down, but still bouncing up again. So we're in that high 6.8 to 7% mortgage rate right now. That is going to put some pressure on the market. I am seeing the market move. There are definitely, especially stuff in the affordable price range, I'm seeing properties move, or if they're in a great neighborhood and they're in really good condition and priced well, those properties are moving. Surprisingly, I've had maybe on the last 2 or 3 that I've bid on multiple offers and representing buyers. And so ultimately what's happening is, again, you're seeing just peak of buyer activity. It's May, it's June. This is when people buy homes. They want to get a home in the summer, so it's easier to move in the summer, and they can be in that house before the start of the school year. That's why it softens the second half of the summer. And I've mentioned this before, is because, by the time you get to July, if you don't go under contract until July, it's not going to close until mid-August, sometimes even September if the seller has a lease back. Well, by then you want to be, maybe your kids need to be back in school, or you need to be back full-time at work. And so what happens is it softens the buyer activity. On top of that, buyers tend to go on vacation because it gets really hot. And so people go to the beach and go on vacation in July and August. Anyways, I think right now, as long as mortgage rates, I've said this before too, if they stay at or below 7, I think we're okay. Obviously, if they start really pushing higher, and we're kind of right there, so we're watching it, if they start pushing higher, I think that would create some more softening in the market. But so far, Austin's kind of hanging in there. We've seen the median home price have more traditional kind of spring bounce, but we're coming to the end of the spring. We're now in the summer. Buyers that are writing contracts right now are not going to close until July. And so now we're already pushing those contracts into the second half of the summer starting now. So it'll be interesting to see what that data looks like when we get there. Anyways, I hope this was helpful. If you want to follow all these videos, make sure to check out Ryan Kelly Group on YouTube. You can see all of our weekly market trend videos. Until then, hope you're enjoying the first few weeks of summer, and talk to you soon.